Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarli. Great to have your company on this Tuesday when, of course, we started the day's session with a bit of wobbles amid what's happening in the Middle East, then a little bit of a rally and finishing the day, I believe, pretty flat. Let's have a look at where the CBO 200 is, now down 0.2% on the close there. The S&P ASX 200 heading into match off is down just 8 points. So yeah, pretty flat there, 8,783. A lot of momentum coming through in tech. The miners look pretty good, but the banks, healthcare, telco coming under pressure. And of course, we did have a bit of a weak session overnight. These renewed oil volatility concerns and concerns about the escalation in the Middle East really outweighing these attempts to bring a pause in the war. And we're of course waiting for a raft of big earnings coming through out of the US as well. So let's get into the day that was, if you will, and Tech Tuesday, given that tech was the strongest sector, up by more than 3%. A bit of a return to some of these chip makers, gains across Asia as well. So some of these jitters that we had seen from Moonshot's Kimi 3K model that had sparked heavy selling, we saw some movement coming back through into some of those chip players. But iron ore actually fell to a near 2-week low. These worsening profit margins at some of the Chinese steel mills, and of course continuing what we're seeing in the Middle East, just really weighing on the outlook for iron ore. And profit parade this week, we get Tesla, Alphabet, Intel, GM coming through tonight, along with GE Vernova, IBM, Moody's, Texas Instruments. So it is really ramping up. We'll talk about that with our guest coming up shortly. But let's quickly have a look at how the sectors fared today. Tech was the standout. NextDC there up by more than 7%. It was the stock of the day. It's won more contracts. Does that mean more upside? Healthcare stocks, meanwhile, they looked like this. No, they didn't. Let's have a look at what iron ore stocks did today. A little bit mixed there, but you did see Fortescue off by about 1%. And then looking as well at some of the lithium players, particularly after we saw a bit of a sell down coming through in one of the lithium contracts. That did weigh on some of these players. The Bloomberg Global Commodity Lithium Index down almost 6%, the biggest one-day fall since the start of the Iran war. Having a quick look at some of the corporate stories we touched on NextDC. It's lifted contracted data center utilization by 73 megawatts, and that follows some of those new customer wins. Telix reporting a 21% rise in second quarter revenue, shares up almost 2% there. Hub24 went lower despite reporting record full year 26 platform net inflows of just under $19 billion. Contact Energy lifted its June mass market electricity and gas sales, shares slightly higher. And Clinuvel is now on the US, or in the US I should say. It's begun trading its American depository shares on the NASDAQ, shares here down by more than 2%. All right, let's welcome to the COB Martin Crabb from Shaw and Partners. How are
almost
you?
Martin Shaw from Crabb and Partners.
Martin Shaw from Crabb and Partners. That was a bit of a, what do you call that? A faux pas. Let's talk about earnings season, Martin Crabb. And really as it starts to ramp up, this is the key driver given we're in a very quiet period here ahead of reporting season.
Yeah, it's the biggest name in town, I think, or the biggest game in town is just how incredibly strong the US earnings picture is evolving, and we're seeing analysts upgrading not just this year's earnings. So this is calendarized consensus earnings for the stocks in the S&P 500 index, right? So it's a pretty broad measure, and it's the growth from 2025 to 2026 in the black, and you can see there 2027 and 2028 in the sort of teal and gold, all being revised up. Everything's being revised up, and this is after 13% EPS growth last year. We're looking at above 25 this year, followed by 2 lots of 15. Like, just incredible earnings growth in an economy, in a share market that's already massive, right? It's already tens of trillions of dollars in size. So it's quite incredible. There's 2 things driving it really. There's AI CapEx, which, you know, we talk about every day, and you'll see, I think, Alphabet reporting tonight, they'll probably upgrade their CapEx. Because it's like, that's the biggest game in town. It's not a winner take all, but it's a winner take most. And all of the big players want to show that they're up for this. So I think there's a big, there'll be a continued improvement in AI capex, AI-related capex. We'll get through $1 trillion if we add them all together. And the second part's the US consumer. So Bank of America, obviously a big bank in the US, published some of their data on their accounts, and spending's up 6.3% in June.
Wow.
So some of that's beer-fueled activity from people that went to the World Cup, all the Scots that went to Boston and all that sort of stuff. But a lot of it's just people feeling better about themselves. The University of Michigan Sentiment Index was up through 54 earlier in the week. So US consumption spending and or US consumer spending, and AI capex are driving a lot of this growth. And both of those things look like they're slowing down. In fact, they're accelerating. So it's kind of hard to be too bearish on US equities at the moment.
You do say one of the canaries, at least in the AI coal mine, is Oracle. What are we seeing with that?
Yeah, so of the hyperscalers, and Oracle doesn't often get thrown in there, but it is one. Most of them are using free cash flow. Oracle's probably a little bit different. It's borrowing money. So it's out there saying, look, we're going to bet on the future, and rather than using free cash flow to do that, we're going to go and borrow money. So their balance sheet's becoming more geared. It's still pretty under geared, but of all the players, they're not funding it from cash flow, they're funding it from the debt markets. So that's one of the stories in private credit in the US is, are you lending to a hyperscaler who's building a data center which may or may not get used? So whenever there's a question mark around the sustainability of this AI capex, and are people actually going to make any money? Because you remember the dot-com boom, there was lots of people laying cable everywhere, but not a lot of it made a lot of money. So that's the thing to watch, is how is their debt trading? So that was a measure of the credit default swap, or the probability of them going broke. If you remember back to The Big Short and that movie, that was all about people buying credit default swaps on mortgages and banks. This is people buying protection on a hyperscaler. So if anyone's going to hit some trouble, it's probably going to be Oracle. So I think investors, and we certainly do, just keep an eye on these sorts of measures, because the credit markets do tend to move before the equity markets, Juliet. That's been my experience. So keep one eye on that number there.
I think I got to watch The Big Short as a compliance hour at one point, which
Is that
was
right?
more fun than some of the other CPD hours.
Yeah, well, that's a good way to earn CPD hours, is watching Margot Robbie in a bubble bath, right? So
I wonder who was behind that decision. All right, well, let's bring it home. And what's been catching your eye here? Some big moves with, NextDC, the data center momentum here too.
Yeah, it seems like that's we're sort of caught up in the global market. We don't quite have the volatility of maybe Taiwan and Korea, which are big punting markets, but we certainly do sort of ebb and flow with those. I mean, I read somewhere that Australia's got the 4th largest data centre capex build out that's being planned. So, we have had OpenAI down here, we have had Anthropic down here, we've had Microsoft down here. They're all looking at this, saying it's rule of law. You speak English. You're plugged into the global network. You're multicultural. All those sorts of things that they like. And so we're seeing a lot of capex plans in that space. So I think we don't necessarily have the hyperscalers that the US does, but we do have some businesses that are well positioned to benefit from that. Goodman being one, NextDC being another. There's a couple of the small engineering contractors like Southern Cross Electrical, so they're trading like an AI stock as well. Sims Metal, which does recovery of memory from phones, they're an AI stock. I thought they were a metal recycler, but there you go, they're an AI stock.
Another one I heard today, Symal, S-Y-M-A-L.
Okay, I haven't heard of that one.
Into construction, I think.
Yeah,
on
okay.
that side.
Yeah,
so
there's quite a few stocks. My colleague Phil Pepe, who comes on this show regularly, he covers a couple of those names as well, and they've been performing very well. So I mean, I think the preconditions for a bubble are there, but we're not in one yet. If you look at valuations, it doesn't look like it's that frothy yet. The US market's on, maybe 21, 22 times forward earnings. It could easily be on 24 or 25 given where the markets are. So I don't think we're in that bubble territory, but the preconditions are all there.
Yeah. What about the overall economy? Because it's looking 50-50 now in terms of a rate
Yeah,
hike.
look, it's been a really tricky one, and a lot of people have got this wrong. So everyone went way too heavy on they're going to cut rates, they're going to cut rates, they're going to cut rates, to oh my heavens, inflation's a problem, they're going to hike by 3, 4 or 5. They've turned hawkish, and a lot of people have been changing their forecast. So a lot of economists have said, look, they're on hold. So we did some analysis on the Feb 27 futures, which is the next it's the first meeting of the new year, right? There's quite a pause over the summer period where the RBA doesn't meet. So their first meeting next year. So we'll find out where rates are, and it's become a coin toss. So there's a 50% chance, according to the futures market. So we're just using if you want to be technical, a binomial pricing model here, Juliet, to calculate the probability of these different things. So it's 50-50, a hike or a no change. So our favourite economist is George Theranou from UBS. He's sticking with his August rate hike, but he's looking increasingly isolated with that view.
August this year.
August this year,
wow.
almost around the corner. So that is becoming an outlier view, but he's been pretty good. He's the rates whisperer. So we'll see. So I think that the outlook for the domestic economy is continuing to deteriorate. That's what we're feeling, and that's what we're saying. And obviously, the changes in the budget aren't helping the real estate market, and that's really important for psyche. I mean, people just like the fact that their house is worth a bit more money, and if it's worth less or they just bought a house, they get really nervous and they stop spending money. So the wealth effect does take a while to flow through Juliet, but I think it's there in the background. So I think, if anything, the market will probably shift away from rate hikes altogether.
And given what you just mentioned there, it's interesting you talk about the psyche. I think Lovisa was one of the worst stocks today. Are you still sort of thinking that consumer discretionary stocks are somewhere you'd just pause for a bit?
I think so. I don't think the macro is going to be favourable to you. I mean, there's always stock specific. There's always like a really good retailer out there, you know, whether it's Nick Scali or GYG or something, who just executes really well. So even though the macro is not favourable, you can get an operator that's just really good retailer. But as a whole, the thing that surprises me is the pricing of consumer staples stocks. So things like Coles and Woolies look really expensive to me. I can't justify that based on the slowing economy. And then you've really got to pick your stocks when it comes to the smaller retailers. As I said, if you've got a good retailer that's executing well, they can do well despite the macro. But basically, it's probably not a place that we want to go hunting just yet. I think we want to see a bit more blood on the street, if they say, and get through reporting season. Because there's going to be some landmines. They're probably in that consumer sector, because that's where the softness in the economy seems to be.
Alrighty, we'll see what August brings. We're going to talk to you one more time before August, though, next week. Thank you, Martin. Martin Crabb from Shaw and Partners. Remaining stock specific there, NextDC was the stock of the day today, and that was after it announced its contracted capacity increased. We heard from our experts, Mark Gardner from MPC Markets, Sanjeev Narendran from Team Invest.
So far, they've just been racking up losses. The market cap of sitting around 8.5 billion, and last year they lost 58 million. It'd be great if they turn it around and start to make profits, but it's one I don't mind sitting out, because the risk is just so high on could they, maybes, what ifs, and if they, there's all these kind of questions that go around. Who knows if it's going to eventuate or not? I'll wait for it to happen, and if they do start making steady, regular profits, maybe at that time I can consider investing.
Yeah, look, we're super positive on data centers, not on NextDC. And I think Sanji summed it up, like estimates, what ifs, blah, blah, blah. Like, this is all pie in the sky stuff. I think that chart says it all. In absolute peak froth of data center sentiment,
Let's have a look at some of the market leaders on what was a bit of a flat session. Predictive Discovery, they're up more than 9%. We just touched on NextDC at quite a big length. Interestingly, South 32 did quite well today despite that fall in iron ore, and Evolution Mining there as well. Let's have a look at the laggards though. Helia Group, Liontown Resources, Eagers, Netwealth and Hub24. Despite the fact that it achieved record platform net inflows, shares down almost 5%. In the small end of town, Aurelia Metals was up almost 16%. We touched on Plenti as well with its market update, sending shares up plenty, more than 12% higher. Let's have a look at some of the laggards though in the small end of town. Prospect Resources down by 15%. All right, well, as we touched on with Martin, it's really about the US earnings tonight. IBM, Moody's, CME, Texas Instruments, ServiceNow, GE Vernova. Also the ADP employment change, that weekly survey, and an ECB bank lending survey out as well. Tomorrow, Wednesday, here we have Korea's PPI for June, Japan's trade balance later in the evening, the UK CPI, and locally some quarterly updates including Beach Energy, Linus, Paladin Energy and West Gold Resources. Getting a final check on where the market closed, the CBO 200 there is lower by 0.2%, while the S&P ASX 200 has finished the day's trade. I mean, you've got to say that's flat. It was up 2 points, 8,793. So just in the end, the winners, if you will, overtook the laggards only slightly, thanks to Minerals 260, Predictive Discovery, NextDC, South 32 and Bellevue Gold, which lifted the overall market to a 2-point gain, 8,793. Unchanged over the last 5 days and unchanged since the beginning of the year. We'll be back from 9:45 a.m. Eastern tomorrow. Have a great evening.